Hi, my commerce stream students and my banker friends. So this is my second video on accounting for beginners. In the first video, we have already discussed in details about accounting, objective, functions, various aspects and type of accounts, rules, regulations and journal, ledger, subsidiary books, trial balance, everything we have discussed. In this video, we will focus on subsidiary books and a problem related to triple column cash book. That means cash book having 3 columns. All of you know, journal is the books of original entry or prime entry. Transactions are recorded in it first in a chronological order. But when the business is enlarging, that means the volume of transaction is very high, it is not possible to prepare a journal. From the journal, we will post the transactions or debit and credit amount to respective ledger. In order to facilitate this, journal is subdivided into various books known as subsidiary books or principal books. So there are 8 types of subsidiary book. First is cash book. All cash and bank related transactions are recorded in the cash book. Then purchase daybook or purchase register. All credit purchase of goods are recorded and those goods should be meant for sale. Suppose you are purchasing goods, it is for personal use and it is not meant for sale, then it will not find its place in accounting. Then sales daybook or sales register, all credit sales will be recorded there. Then comes purchase return or return order books. When we are purchasing goods from our supplier, we have every right to return the goods if goods are defective or not according to our specification. So those are recorded in the purchase return book or return order books. When we are returning the goods to our supplier, then supplier prepares, that is credit notes, because when we are purchasing goods, he will debit our accounts in his book. When you return, he will prepare a credit note. That means your account is credited in my book, and for supplier it is credit note, for buyer or for the business it is debit note. Similarly, in case of sales return, suppose we are selling goods to our customer on credit basis, they have every liberty or right to return the goods to us if goods are not according to the specifications. That is known as sales return or return inward books. While when our customer will return the goods to us, we will prepare a credit note mentioning that we have credited your account or reversed that account from our book, that is credit note, and that is similar to debit note for the customer. Then bills receivable books, where the business is selling goods on credit basis and the credit may be for suppose 3 months, then the supplier or the business will prepare a bill. In the bill, you will write like this: pay Mr. X or me or my order, suppose rupees 1 lakh after 3 months and value receipt. Then the customer will read. So he is the drawer of the bill, that means our business is the drawer of the bill and the customer is the drawee of the bill. If the customer is satisfied, yes, he agrees. Within 2 parallel transfer slide like this, he will write accepted. After accepting the bill, and put his signature. After accepting bill, he will return the bill to us. For us, it is bills receivable. For him, it is bills payable. So all those transactions are recorded in bills receivable book and bills payable book. Similarly, when we are purchasing goods from our supplier on credit basis, our supplier will prepare a bill sent to us, we will accept it and return to him. For the supplier it is bills receivable, for us it is bills payable. So what is the utility of this bill, issuing bill? For the business has three alternatives. Suppose business is not in need of money, he can wait for business can wait for 3 months. Then business will keep the bill till the date of maturity. On the maturity date, business will send the bill to the customer and customer will make the payment. Second, suppose he is in need of money, he may approach the banker to discount the bill at the bank. Bank will keeping some interest portion that is discounted for the discounted period, will credit in the bank account maintained by the customer. On the due date, the banker will send the bill to the drawing and make the payment. If payment is made, it is honored. If payment is not made, it is known as dishonour of bill. Third case, suppose we are purchasing goods from, suppose Z, our supplier. We can endorse the bill in favor of our Z, and Z will collect the bill on the due date from our customer. This is all about the benefit or facility of drawing bill. Then, if any transactions cannot be recorded in any of the above 7 books, it will be recorded in the journal proper. For example, we are purchasing assets, selling assets, depreciation, accrued expenses, prepaid expenses, accrued income received in advance, then meeting any, that is goodwill, patents, copyright, whatever that may be. If it cannot be recorded in any of the 7 books, it will be recorded in the journal proper. Now we will solve one problem in the books of Messrs. Gupta, and we will prepare a triple column cash book as on, suppose month is April 2023. It is given cash in hand 80,000, cash at bank 1,10,000. This is known as opening balance. So we write to balance brought down. In the cash we write 80,000, in the bank we write 1,10,000. Then purchase goods for 24,000 plus GST at the rate of 12% from Messrs. Batra, Mumbai, and paid by check. Very important is GST. For GST, I have already prepared 2 videos that you can refer, and again for your benefit I am discussing GST. GST may be intrastate GST, intrastate, and another is interstate. Or intra-union, interstate. In case of intrastate, means both the supplier and the buyer belong to same state. Suppose Mr. X of Bhubaneswar purchase goods from Y of Cutter, then it is a case of intrastate bill. In case of intrastate, the GST will be divided equally under 2 heads. One is UGST, that is Union GST, another is SGST, State GST. If it is interstate between the states, then it is known as IGST. Only one head, IGST. That means under intrastate, state government will keep, suppose it is GST, suppose 12%, state government will keep 6% GST and remit 6%. The businessman will deposit with the state 6% and send to the center 6 6%. If it is interest at GST, entire 12% will go to IGST. Then we will solve the problem. Purchase goods for 24,000 plus 12% GST by check. So when it is payment is made by check, in the particulars we will write date, then by purchase, and in the bank column we will write 24,000, then by UGST that is 6, this is IGST. So entire amount will go to IGST. So it will be written by IGST. 12% of this 2880. Then cash purchases of 6,000 less trade discount 5%. Some 6,000 5% 300. So amount is 5,700 on the purchase. This is known as input IGST. That you have to remember. Suppose you are purchasing goods and paying GST. It may be HGST or UGST or IGST. In case of purchase, it is known as input IGST. This is input IGST 2880. At the time of sale, it is output HGST. Output HGST or output UGST or output IGST. Then here 6%. 6% means 342. So here cash purchase is by purchase. So on the cash column write 5700 by input HGST SGST, that is 342, by output input UGST 342. It will be shared equally by center and states. Then purchase postage stamp for 1,000. So again I recollect for your memory I am telling. Account is of 3 types. One is personal account, second real account, third is nominal account. In case of personal account, debit the receiver, credit the giver. In case of real account, debit what comes in, credit what goes out. In case of nominal account, debit all expenses and losses, credit all gains and income. So here we are purchasing postage stamp. So stamp account debit or postage account debited to cash. So cash credited by postage. On the cash column, we will write the amount 1,000. Then cash sales, deposit bank. We are selling the goods or cash. 2,24,000 includes CGST, AGST, 12,000 each. Means 12,000 plus 12,000 is 24,000. So cash receiving 2 lakh and we are output CGST, output AGST 12,000 each. Again that cash is deposited in the bank, so immediately directly we will write on the bank column to sell. On the sale we will write 2 lakh, in the bank we will write 2 lakh. Then by output SGST 12,000, 2. This is 2, debit side is 2. Then output UGST, that is also 12,000. Then draw cash for personal use. So all of you know, when the proprietor withdraw cash for his personal use, it will be debited to drawing, because when he is investing cash in the business, his capital is credited. When he is withdrawing, his capital is debited. Debit form of capital is known as drawing. So drawing account debited to cash. So cash credited by drawing. The amount is withdraw, that is draw cash for personal use 8,200. Then next is given withdraw from bank for office use. When he is withdrawing cash from the bank for office use, cash comes to the business, cash account debited, bank is the giver, bank account credited. So 16,000 cash account, on the cash column and debit side write to bank. On the cash will write 16,000. On the credit side of bank, it is withdrawn, so by cash. In the bank will write 16,000. So you remember, when one transaction affects the both cash and bank, one side, one debit side of cash and credit side of bank, or debit side of bank, credit side of cash, it is known as contra entry. In the particular column, we will write C, that is contra entry. It affects both sides at the same time. That is known as contra entry. Then paid salary 6,000 by salaries, cash, that is 6,000 we paid by cash. Then paid rent 10,000. Then we are paying, the business is paying rent. So when the business is paying rent, write by rent, by rents. In the cash you write 10,000 by input AGST, SGST and input UGST. It is given 600 each. So we write 600 and 600 here. Paid Messrs. Rohan and Company by check and cash discount allowed with 22,000. 48,000 paid to Messrs. Rohan and Company. Here that is bank withdrawal, bank credited by who has taken? Mohan and Company. How much he taken? He has taken 48,000 and he allowed a discount 2,000. So discount is income for the business. That means business have to pay 50,000 to him. He has paid 48,000 and allowed discount 2,000. That is discount received income for the business. Then received check from Subhas for sale of goods. Sales value 16,000. GST, CGST 6% check. When we are receiving check, we like bank account debited to Subhas. How much? 16,000. Bank to Subhas 16,000 to output SGST, SGST, CGST. That is how much? 6% each. So 6 means 960, 960, 960, 960 each. Because received check from Subhas and deposited in bank in the same day. Then over. Manoj, a customer, deposited into bank 22,000 directly. So bank received cash from Manoj. So write bank account debited to Manoj. How much? It is directly deposited 22,000. Then bank charge commission 2,000 plus CGST, SGST. When bank charges commission, so we will write by bank charges. Bank charges. It will debit our bank account. The business bank account is debited. How much? Bank charges 2,000. Here the detail bank charges 2,000 by input CGST, that is 6% each month, 120. Then SGST 120. This is about. Then withdraw from bank for paying income tax. When the business is withdrawing cash from bank for paying income tax, that all of you know that business is treated separate from its owner. Whatever the owner pays for his purpose, it is treated as drawing. Here owner is paying for his income tax and withdrawing from bank 10,000. So bank account credited by drawing. So in the bank we will write the owner has withdrawn 10,000. 10,000. After posting these transactions in the triple column cash book, we have to balance the cash column, bank column and discount column. Here you see in the cash column the total is 81,600 debit total. Credit total we have to total, that is 1,200, 11,200, 17,200, 17,200 plus 8,200, 9,200, 9,200 plus 342, 684, 684 plus 5,700. This is the total credit side cash. 22,784. 22,784 is the credit total, debit total 81,600. So cash in hand, that is cash balance at the end of April is this much. So it is 16, then 8, 8, 5, 58, 8, 16, 58, 8, 16. So credit debit side is heavier, 81,600. It is debit balance. On the credit side we write by balance carried down. The amount will write here 58,816. 58,816. As a result, the total is 81,600 and cash column closed. Then we think about bank column. If the businessman is having own funds in the bank, then definitely his deposit is more than the withdrawal. But if he is availing the overdraft facility or OD limit, overdraft limit from the bank or CC limit from the bank, his bank account will show credit balance. That means if it is cash at bank, it will shown under asset, that is current asset, cash at bank. If it is overdraft, bank overdraft, it will show under current liability, that is liability side. Or if he allows also to withdraw the customer or the businessman more than a deposited amount, then it is known as overdraft. Sometimes the businessman allow temporary overdraft to the customer. So here the debit will total, it is 2 lakh, then 2,24,000, 2,24,000, then 16 plus 20, 38,000, 2,24,000, 38,000, 1920, then 1920. Then we will total the bank column debit side. 920, 2,63,920. Here we write 263,920. Then we will total the credit side of bank column. It is showing 24,000 plus 2,880, then 26,880. Here 16 plus 48, that is 64,000. 64,000 plus here 10, to 12,240, 12,240. So credit total comes to 103,120. So it will be deducted from 263,920. Then 103,120. So difference is 800, 061, 160,800. This is by balance carried down. Cash balance we have written in the cash column. Bank balance 1,60,800 will write here 160,800. As a result, the bank total will tally 260,920. 63,920 tally it. Then the discount allowed is nil and discount received is 200. So it is this discount is nominal account which will be closed by transferring to profit loss account, to profit and loss account. The amount is, that is here, discount received. Discount received is, that is, so discount will write, will not balance, so write only discount total, that is 2,000 is the discount received total. Discount allowed total is 0. So this is all about preparation of cash book. Then we will prepare the purchase book, sales book, purchase return book, sales return book, then bills receivable, bills payable. For bills of exchange, we will prepare a separate video. Then in the next video, we will prepare some transactions relating to purchase book, purchase return book, sales return book, etc. Thank you for watching the video. Don't forget to subscribe and like the video. You can share to your friends so that they will be benefited.